Anil Gupta, CMD of KEI Industries, joining us now. Mr. Gupta, very good morning and great to have you on NDTV Profit as always. Let's just start with your FY25 outlook because you clocked a decent, nearly 20% revenue growth. What is the outlook, or what are you penciling in terms of guidance for FY26 on revenue? Let's start there. And is Q1 looking like it's on track?
Good morning to you, Tamanna. In my earlier interviews, I have guided that we are on the on the right track of our revenue guidance, which we have given this year. Because of our new production capacities coming up. So we expect that this year will be little, maybe we may grow by around 17 to 18% because of the new production capacities will be gradually commercialized in our Sanand plant. And as we are operating on almost full capacities in our existing plants, but still we will try that if we could achieve a revenue target growth of around 20%. And it is driven by basically domestic demand and also strong demand from our export customers. And we expect 17 to 18% of our revenues coming from exports in this year versus 13% last year.
If I could ask you on that exports part, what markets are you looking at? Because you're one of the few companies who's looking at more orientation towards exports at a time when it's a very difficult global situation.
See, as on today, our export revenues are too low to be affected by all these wars and other geopolitical situations. We are just talking of 1,700-1,800 crore or maybe 2,000 crore of exports, which is very low as compared to our peers in China or other markets. So it should not be difficult. And also due to this tariff issues in various countries, India is definitely a preferred supplier because of its political relationship with most of the countries and free trade agreements coming up. So it is definitely, and our products have now acceptability all over the world. We have worked on necessary certifications in various countries to become eligible to sell in those countries.
So, Mr. Gupta, Neeraj here, good morning. Great talking to you. You expect a pickup because of all of this in the current year on the export side? I mean, as a percentage, would it keep on going up over the next 2-3 years?
Yes. Our aim is to achieve 17 to 18% of our revenues from exports this year.
Okay.
And maybe around 20% next year. But moving forward, our aim is to reach around 25 to 30% of our revenues coming up from exports within next 5 years. That is our target. And I'm pretty sure that we should be able to achieve this target. Domestic market is also quite strong. They're driven by mainly energy sector, and also new industries, data centers, and capex in infrastructure.
Okay. Now, I believe in order to do all of this, right, the Sanand plant expansion as well, can you give us some update there? Because the belief is that the scale up of that will drive margins, incremental revenues though come in maybe late FY27. So is that back-ended, the expansion and the scale up, and does it have a material impact on margins in a business like yours?
We are likely to commission part of the plant in Sanand next quarter, means in second quarter. And gradually the production will be ramped up once it is commercially stabilized. The whole full project will be completed by March 26. So the major revenues from that plant will be coming up in FY27.
Okay. No, and just that follow-up to that, Mr. Gupta, one is that therefore in a business like yours and with the competitive intensity that there exists, can a particular plant scale up help margins? Part one. Part two, I'm just squeezing in a follow-up here. what do you do with the remainder of the cash that you have? Do you invest in further capex in Sanand or otherwise? Because you do have the QIP balance as well with you, right?
See, margins depends on how quickly we are able to ramp up production in a new greenfield facility, and also how quickly we are able to bring orders and market into that plant. Secondly, regarding further this cash, we uh, we will chalk out a growth plan subsequent to 26-27, so as to keep maintaining our growth trajectory even after 5 years, because it takes around 2 to 2.5 years or maybe sometimes 3 years to build a plant. So we already have a good amount of land bank with us, and we will chalk out the strategy to the areas where we want to grow in our cable business.
I just want to press on a little more, Mr. Gupta, on the competitive part. Two major groups have made an announcement of entry into the space, cables and wire space. Are you beginning to see the impact of that? Do you anticipate some impact of this coming in? Because we've seen the kind of disruption that has happened in the paint space, for example. What is your perspective on this?
See, at the moment, there is no impact because they are yet to come into any type of production, or they are not not in the market. So far as impact on our business is concerned, I don't see much impact because the markets are growing rapidly. So even if a new entrant comes, it will not have a major impact because there will be enough market for them as well. So I don't see, and we are increasing our market geographies. So we will definitely insulate ourselves from any domestic competition if it is coming from the new players.
And so how are you shoring up? You're saying that they're not on board yet, which is completely true, and the market is growing, also true. But what is the strategy on your end?
Strategy is that we have to have more penetration in untapped markets in India. We are improving our dealer network, our B2C network, so that we are well and entrenched and acceptable to the customers. We are ready for the competition. We have the competitive intensity available with us, and also we will look for newer markets wherever possible, so that our growth is not impacted due to the more competition in India.
Okay. Mr. Gupta, we wish you all the best for that and more. All the best with the order wins as well. You had a few, maybe more come in store. Thank you so much for speaking to us today.